Hi, I'm Mike Stanton. It's February 7th. This is the BAM Weekly Muni Market Update here with Grant Dewey from BAM's Capital Markets Desk. Grant, thanks for being here this week.
Hey, Mike.
So it's another solid week for volume in the muni market leading up to the weekend January jobs report. What kind of activity did you see?
Yeah, I mean, listen, last week, the Fed kept policy rates unchanged, and they basically with a comment that inflation is dissipating, but maybe too gradually. So we entered this week. This morning, we saw, as you mentioned, the job growth slowed in January. So non-farm payrolls were up by 143,000, which is below the 170 that was expected, and well below December, which was revised upwards to 307,000. Also, job growth for all of 2024 was revised downward from 186,000 per month down to 166. So factoring all that in, the market has Treasury started a little bit weaker. They've come back, and I think with CPI 2.9%, basically we're now looking full employment at 4%. The economy's on pretty solid footing. I would say that it's really policy uncertainty around tariffs and deficit reduction and things like that that have been the main drivers of market volatility. So in terms of munis this week, there was there's 36 billion of principal and interest reinvestment, which adds to already what we've been seeing is pretty solid mutual fund inflows. So munis have been performing pretty well. I think muni ratios reflect that, where the 10-year ratio is right now at around 65%, which is a 6-month low. 30-year ratio is 82%. So that's a little bit higher. Munis are probably a little bit more attractive out long, but that's still well below the 6-month average. So
We heard a bunch of that from the buy side panel at the Bond Buyers National Outlook Conference during the week, almost uniformly across that panel. People saying that the retail investor in particular is very interested in the market, sees it. I believe the word was generational buying opportunity. They think overall yields are going to go down from here, and so they want to lock in long-term returns. And so there's a strong demand for new issues as they come to the market.
Yeah, and I think that also, since retail will traditionally be a little bit shorter on the curve, I think that explains part of why we've seen a steepening in the muni curve, as the 10-year ratio at 65% reflects, with tax rates at top rate, marginal rate at 37%, that it's pretty fully valued there, and I think reflects the fact that there's a lot of retail buying. SMA inflows continue to be strong. So the long end is probably a slightly more attractive place to be. And we had a strong week this week in terms 311 million of total par, led by a large Harris County mud deal and a Cumberland Valley, Pennsylvania school district deal. So we also were used on a portion of a term bond on LOCO, Lower Colorado. It's a Texas credit, and we saw strong demand on the insured term that was bumped by 4 basis points, and so it really was kind of a strong week for munis all around, and I think part of that is that supply has been relatively modest compared to what we were seeing weekly last year.
Yeah, it was interesting. We saw headlines earlier this week about the month of January. Month over month from December, volume was up, which is an unusual trend. Usually you see heavier volume in December, lighter volume in January. That, of course, it's an unusual year, right? We've talked for most of 2024 about how people were front-loading issuance ahead of the election, so it wasn't shocking that November and December were relatively light. Now there's some talk, and we've heard it from a lot of analysts, that there might be some front-loading of issuance again in 2025. That's people trying to avoid any kind of volatility around tax reform. Again, from the Bond Buyer Conference, one of the interesting observations there was that they think that activity might be concentrated in the higher education and healthcare sectors. If tax reform comes out, it could differentiate between higher education, healthcare, and other private activity bonds versus governmental bonds. And so they think those sectors are the ones kind of most interested in accelerating their transactions on the calendar this year, but still a little bit early to call that a trend. Looking ahead to this coming week, I know we've got another $211 million on the BAM insured calendar. That may grow again. The competitive market's very active. That was certainly a trend we saw last week. Any deals stand out to you for next week?
Yeah, another relatively large Pennsylvania school district deal. Raymond James is going to be pricing a Lancaster County, Pennsylvania deal. So that kind of leads the way at this point. And then there are, again, a relatively heavy slate of competitive deals that we'll take a crack at.
Great. Thanks for your feedback, Grant. Have a great weekend.
Thanks, Mike.